Hello, everyone, and welcome back to the Markets in Focus bi-weekly webinar. I'm Razan Hilal, Market Analyst with Forex.com. Today is June 16, 2026. Markets are reacting to a decline in geopolitical risk and premium, looking forward to the opening of the Strait of Hormuz on Friday and potential peace agreement between the US and Iran that opens up a ceasefire framework or a 60-day period for nuclear talks, which remain a highly sensitive topic for the markets in terms of geopolitical risk. So far, we have a solid bullish rebounds across major markets between commodities, precious metals, and US indices, yet we are still facing a key high time frame levels that may define the next structural moves across these charts, whether that would be a definite breakout back towards healthy uptrends and sustainable uptrends, or defining resistance levels that may pave the way for another consolidation risk on the horizon. We'll be going through these key scenarios. And just kind note that I'm also now hosting a daily MENA market call, also covering these more markets alongside the UAE MSCI for a regional outlook. Okay, the disclaimer here for compliance purposes is done, and we'll jump straight through the charts. We'll be starting with the US dollar index. And over here, we have three key points to go over the US dollar index, which is a solid uptrending bias or a bullish bias defined by an uptrending support connecting higher lows since May 2026, within a broader uptrending support connecting higher lows across 2026 since January, which defines an overall bullish bias so far across 2026, also aligning with the broader multi-year uptrending framework or parallel channel since 2008, which is keeping the overall bias on the US dollar index within a bullish outlook until we have decisive breakdowns below key levels 98, 97, and 95 that may confirm a shift in that overall uptrending dominance, potentially paving the way for extended gains across major currencies across the markets. If not, a sustained hold for price action above the 100.60, 100.80 zone multi-year previous support turned into a resistance since 2023 may open the way for a steep breakout for the DXY, which may weigh further on potentially precious metals and global currencies. So far, we're still in a bullish hold, holding above the 99.50 support and also still fluctuating near the 100 mark, keeping that bullish outlook intact. And from a monthly perspective, also we have momentum holding near the 50 neutral mark, keeping a solid bullish hold outlook. Now, if we jump next to the crude oil chart, which is tracing significant drawdowns as a result of the increased optimism for the upcoming or the opening of the Strait of Hormuz on Friday, relieving pressure across global crude oil prices, and of course the overall inflationary impact across global economies. Over here we have crude oil retested the 78 support, previously mentioned support. This support zone now aligns with the highs of last year's Middle East conflict that also involved the US, Iran, and Israel, which is likely to have or create a potential short term support here, which is between the 78 and the $74 zone. A sustained hold below the $74 mark would likely extend the drawdown for crude oil prices to align with the 70 psychological threshold and with the previous highs of July 2025, and with the 67 mark, which is a multi year support and resistance to price action at least since 2019, where we can have another potential rebound or consolidation risk for crude oil prices once again. Now, over here, should we have a sustained hold for price action back above the 78 mark and further above the 80 $2 mark, we can have potential medium term bullish risk revive on the chart once again, potentially retesting the lower bound of that multi month consolidation on the crude oil chart has been extending since March 2026. Yet now we are far in the bearish breakdown zone. But should we have that scenario play out, climbing back above the 82 and the $86 zone, we can possibly retest 90 for a final bullish continuation test, either another pullback risk, continuing the overall bearish framework for crude oil prices, or shifting that outlook again, once again, towards bullish bias or bullish outlook and risk overall. But over here, we're still in a consistent downtrend mode in line with the market optimism and the setting between the US and Iran, testing that major key support level before confirming the next structure levels further. We can also see from momentum perspective, daily momentum is approaching oversold levels last seen in 2025, which also may pave the way for potential short-term either dip buying or consolidation risks up ahead on the crude oil chart. Now, next up, we have the gold chart. We had a very clean rebound from the 4020 support, a new 2026 low, and we can also see that price action traced an opening gap all the way up towards a previously mentioned critical resistance zone, which is at 4,360 level. I'm mentioning this level every day in the daily MENA market call, running Tuesday to Friday every week. And this is a critical defining level between potential bullish continuation and further resistance ahead on the gold chart, which also aligns with the overall trend line connecting consecutive lower highs since March 2026, defining the overall bullish and bearish outlook on the gold chart. Should we have a sustained hold for price action for gold back above the 4,360, we can expect another potential 100-point rally towards the 4,460, 4,560, and then 4,700 for a major bullish continuation test, either another pullback risk over here or extended bullish forecast back towards 4,900 critical level. That is worth watching on the gold chart. Now, if we drop down to the 4-hour time frame, we can see overbought risks over here uh, last seen in May 2026, which may pave the way for short-term drawdown risks. Other than that, we can just be looking at the prices level by level. The downside risks over here would be a reversal back below the 4,280 mark, potentially closing that opening gap that we saw earlier this week, potentially aligning with key levels between the 4,230 and the 4,220 zone. We can either have potential support level following after we potentially close that gap, should we have a bearish scenario or short-term bearish scenario unfold. Sustained hold below that level would likely extend drawdown risk toward the 4,150, 4,080, and 4,020 for another key test for this year, either another bullish rebound or potential uh, bearish scenario for crude oil prices to retest lows seen in October 2025 near the 3,880 mark, another level that may open the path for long-term bullish positioning on the gold chart. Now, I mentioned the 6-month time frame on the gold chart also in my daily MENA market call, as it aligns with the historical all-time Fibonacci retracement ratio, that 27.2% of the all-time low and high of the gold chart between the 1960s and 2026, which presents us with two key scenarios, either a long-term solid support for long-term bullish positioning on the gold chart once again, or paving the way for a deeper drawdown that may align with the 3,500, 3,000, potentially 180, and the 2,780 near the upper bound of that multi-decade consolidation for potential medium-term corrective cycle on the gold chart, and then opening the path for long-term bullish positioning once again in line with the solid uptrending bias across the history of the chart and notably since the year 2000. That's the overall major extreme scenario on the gold chart. If not, that level may set the tone for the next legs higher in line with that overall multi-decade uptrending bias. Now, next up, we have the silver chart. I'm going to go down to the daily time frame. You can see that silver is also holding below the key neckline of that previous consolidation that gave way to the latest sell-off on the silver chart, in line with the bullish rebound from the lows of this year near the 61.40 mark. We can see over here a short-term hold as well for silver prices below the 71.20 mark, lining with the golden 618 of the overall retracement of that trend spanning between or across the highs and lows of June 2026. Sustained hold above the 618 may possibly retest the 786 near the 73.80 and further near the 77 mark as potential resistance levels within the overall still dominant downtrend framework. And we can also see from a daily perspective the overall bullish rebound from momentum from oversold levels also last seen in 2025 is aligning with the bound of the trend line that previously supported the higher lows for prices since March 2026, leaving a cautious bullish hold for the silver prices over here below the $71 mark. On the downside, should we have a sustained hold back below the 69 mark, we can possibly also look towards closing that gap, retesting key support level between the 67.60 and the 67.20 zone. We can either have another bullish rebound here in line with that, a strong bullish dominance, bullish engulfing, or potential solid bullish reversal towards long-term highs once again on the silver chart, or redirect the bearish forecast back towards the 64 zone and the 61 40 zone for either another rebound or extended drawdown risks towards key levels between the 59, 55, and the $50, 50 to the $48 zone, aligning with also a multi-decade previous resistance turned to a support spanning from the highs of the 1980s for potential long-term bullish positioning on the silver chart once again. Now, the bearish inclination comes from the monthly time frame, of course, from short-term perspective from the 4-hour overbought risks as well. These are the key levels on the silver chart. I'm going to go through the upside levels. Sustained hold for silver above the 71 mark or the previously mentioned 77 mark would likely extend gains back or shift the focus towards bullish positioning, at least back towards our previous high here near the 89 to the $90 mark, for extending back to triple digits. Next up, we have the Nasdaq chart with that solid bullish rebound, removing all the losses seen from the highs of June 2026, potentially aligning back with that high near the 30,700 mark. That's the critical level that we're currently facing. Should we have a sustained hold above this level, we might go up to retest the lower bound of that uptrending support that gave way towards that short-term bearish drawdown on the Nasdaq chart for another key resistance test. Would likely be aligning with the 31,700, which is 100% Fibonacci extension of the overall cycle running between April 2025, 2026, and the lows of 2026, where we can see that alignment near the 100% extension. Now, on the downside, should we have a sustained hold for the price action, potentially back below the 30,400, we can possibly revisit the 30,100 to the 30,000 area. Remains a key psychological and support for the Nasdaq chart that may give way once again to the key 29,700 zone. That was a defining barrier between continuous bearish bias and bullish bias on the chart. We do remain in bullish bias as of June 16, in a cautious outlook below the 30,700 high. Should we have a breakdown below 29,700, we can possibly be looking at the 29,200 to the 170 once again, the 28,700 and the 28,200 levels. Now, these are potential support levels that may give way to the continuation of that overall bullish run. We can also see from a momentum perspective, we're also retesting the neckline of that previous head and shoulders pattern formation that also gave way to that latest sell-off, which is also keeping a cautious bullish outlook until we have that confirmed breakout. Should we have a bearish scenario unfold, we always need to keep two key scenarios in line, as we still have a sensitive negotiation over nuclear talks in line with the extended implications of the oil market shock across the global economic growth and inflation forecasts. A sustained hold below the 28,700 or 28,200 would likely extend drawdown risks towards the 27,500 and 26,600. That would be the extreme case scenario, aligning back with that previous resistance zone of the previous highs of 2025 and 2026 for potential long-term bullish positioning on the Nasdaq chart. Once again, so far we have a momentum directed to the upside in line with the overall increasing bullish outlook across the SpaceX IPO. Now, next up, we have the Bitcoin chart, which managed to surpass the 65,000 resistance, also keeping a bullish outlook intact over here. And we can also see that from a daily perspective, momentum is aligned with the 50 neutral mark. For our time frame, we're also at overbought levels that may give way for short-term drawdowns. Should we have sustained hold back below the 65,000 mark, we can possibly revisit the 60,000 to the 59,000 zone. Should we have an extended drawdown risk on Bitcoin chart for this year, a sustained hold below 59 may open the path for another 10,000 point drop towards August 2024 lows near the 49,000 to the 50,000 zone for potential long-term buying opportunities. For now, we still look like we're on a solid hold for a sustained hold above the 68,000 mark, likely extend bullish forecast towards the 70,000 mark and the 73 to the 74,000 zone before extending a forecast back towards the 78, the 83, and further up towards the 100,000 and above mark. Long term bullish forecast on the Bitcoin chart once again, taking the charts level by level as we have a lot of important events unfolding alongside the approaching summer liquidity risks and the high potential for headlines to quickly shift as well across the markets. Now, key charts that I've also been talking about in the daily MENA market call are the UAE MSCI, where I also mentioned that we had a strong bullish setup for the UAE price action, the UAE MSCI price action that has been trying to hold within the bounds of an uptrending parallel channel since the lows of October 2023. Following that news over the opening of the Strait of Hormuz, reached our previously mentioned target near the 1970 mark, and now we are pushing through. An important thing to note about the UAE MSCI that should it cross over that next key resistance here, the 20.80 zone, we can be targeting the highs of 2026 near the 22 mark that may confirm a potential multi-year breakout for potential inverted head and shoulders formation that may give way to an extended bull run on the horizon in line with the overall long-term bullish rallies of the UAE of the US indices. We had the positive correlation between the UAE MSCI and US indices rolling. However, the impact of the Middle East conflict weighed down on that correlation, which is possibly rebuilding, uh, uh, or the momentum of that correlation is possibly rebuilding once again. We also looked at a key popular chart, which is the SALIC chart that made a breakout beyond also a multi-month consolidation on the chart within or respecting the bounds of that uptrending parallel channel. That consolidation can be seen over here below or traced on the daily time frame. That consolidation can be seen over here, holding below that previously mentioned resistance zone, which was derived using Fibonacci extension tool placed between the lows of October 2023, the highs of August 2025, and the lows of April 2026, where we can see the alignment near the 236 and 272 Fibonacci zone. Should we have a sustained hold for SALIC above the zone, above the 6.11, we can possibly target the mid zone of this channel near 6.67 and the golden 6187.5, increasing the long-term bullish forecasts for or long-term bullish investing for the SALIC chart once again. On the downside, a breakdown below the lower bounds of that consolidation or a drop at least should be close that previous gap below the 5.7 mark. We can possibly revisit the 5.57 and the 5.3 before for either another bullish rebound or testing potential long-term bearish breakout on the chart, opening the path for potential long-term bullish positioning once again. But so far, we're still on a bullish hold in line with the UAE MSCI and the US indices so far. Thank you so much for watching. We'll be posting the recording of this webinar on our YouTubeForex.com Middle East channel and on our LinkedIn handle. If you have any questions, please let me know. Happy to engage and go over any charts or questions that you may have. Thank you for watching.